everyone, and happy Friday. Welcome to today's Market Snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Now, let's start with a look at the economic calendar. And as you can see, we have had a few economic releases today, but I'm sure you'll all agree nothing really stands out quite as much as that US GDP figure for the third quarter, which we'll come to in a second. The economic sentiment figures and the services, business, industrial, etc. figures for the euro area were also released this morning. But the reason why they're typically low volatile, as you can see by the single yellow exclamation mark next to them, is because they do come a week or two after the PMI readings, which tends to give us this insight a little earlier. So we did see a small beat here, but the actual market reaction was quite minimal. I do think it's important to know that we saw that beat on the economic sentiment indicator rising to 106.3, potentially providing a little bit more optimism for the euro area economy. We've also had the University of Michigan consumer sentiment reading, the revised figure, which was revised down to 87.2. A little bit concerning, nothing to get too carried away with at this stage, potentially offsetting a little bit of the positivity which came from the GDP reading. We've got the Baker Hughes oil rig count later on this evening, and again that has been creeping higher little by little. And when we're talking about OPEC and maybe Russia agreeing on an output freeze or cut deal, the fact that we're seeing oil rigs in the US creeping higher at a time much earlier than Saudi Arabia and other OPEC members had anticipated, it starts to make you question whether increased output in the US is possible in the next 3, 6, 9 months, which could almost offset any reduction from OPEC and Russia, and potentially lead to effectively a status quo in the supply-demand side of things. So that's going to be a figure I think that's going to be worth keeping an eye on later. But like I say, the standout release here is the US GDP figure. Now, the reaction to the GDP figure was actually quite small, and the reason for that was quite simply the fact that I think expectations going into this release were actually quite high. We can see, for example, from the CME Group Fed Watch tool, which I've highlighted on here before, for December, the expectations suggest that a rate hike in December is around 74 to 75% priced in at this stage. Now, many of you may have heard stats that suggest, and I should state that these are not verified by me personally, but stats that suggest that the Federal Reserve has never raised interest rates in the last 50 years. When the implied probability in the markets was below 70%. So the fact that we're still above 70% and considerably so at this stage, of course we're still 6-7 weeks before the meeting, would suggest that people are quite bullish with regards to a rate hike here. So what this meant was, going into the GDP figure, I think the upside potential for here is in the reaction, the ability of the market to react to a better figure or equal figure to market expectations was always quite small. I think there was always much more downside risk associated with this, but of course that did not materialize. So the response that we've seen in the markets to that release were not non-existent, but they weren't as big as they could have potentially been. As you can see by the markets here, it has been a bit of a slower day. I think we have to take into consideration that when we've got fewer economic releases and the major economic release comes in line with expectations, earnings season, of course, is a key figure here, but I think there's around 17 of the S&P 500 companies reporting today, including a couple of big names like ExxonMobil and Chevron, but still a low number compared to what we've had this week. The markets are potentially going to slow down a little bit, but as you can see in euro dollar, for example, we have seen this boost higher, but we're still finding resistance around that 109.50 level, which is the first major level of resistance that we're potentially going to face here. If we see a breakthrough here, then we could be looking back towards the 103.50 to the 110.30 level to 110.50 level, that would be my next major level of resistance. We could find some psychological resistance around 110 as well, with it being a round number, but we are seeing a little bit more upside here. But again, we do seem to have run into the same barrier that we did a couple of days ago. We're continuing to see a little bit downside in cable as well, but that 121 seems to be holding at this stage. Dollar yen is one where we saw a strong day yesterday. We finally saw the break through this trading range, which had been stuck in for the last 2 or 3 weeks. Most importantly, though, that lagging line breaking through and holding through the Ichimoku cloud is a very bullish sign. I really wouldn't be surprised to see us trading towards these 107.50 levels in the short to medium term, now that we've broken out of that trading range. I think the indices are also quite interesting right now. I've talked about how they continue to look bearish, the fact that we're struggling at the top end of any trading ranges. The DAX potentially looking a little bit more bullish, more so than any of the others. This rising trending line, these buying on the dips, is typically a bullish sign, but we are still failing around the 10,800 to 10,850 levels, which does concern me. It is a little bit bullish again that we have bought into the close here. We dropped around 10,550 earlier on in the session, and yet we've rallied back towards 10,700 into the close. Heading into the end of the week, that is typically quite a bullish signal, but really I think there's only so much we can read into today's moves, given that it has been a lightly traded session. It's been a light data session, light earnings session, and given the fact that it's the end of the week, that does tend to be a little bit more significant. I think next week is going to pick up quite considerably, though. I do feel like this has been a week where we've been building up to a big week for the market, and I'm not just saying that, of course. Next week we've got the Bank of England decision, we've got the Reserve Bank of Australia, we've got the Bank of Japan, an all-important Federal Reserve decision. Now, I should state now that the Bank of England is expected to do nothing, and I'd be very surprised if they do provide further stimulus, because the economic data so far hasn't deteriorated, so there doesn't seem to be much reason to, especially with the pound being off around 20% since the Brexit vote against the US dollar and the euro. The Federal Reserve is obviously not expected to do anything. We're looking at December, with it coming 6 days before the US election and no press conference following. The RBA, I guess the data we've seen very recently has suggested there's more chance, but I think broadly speaking, people are expecting them to wait till next year at this stage. And the Bank of Japan, they recently announced the fact that they were looking at a targeted rate of interest on the 10-year bonds, which suggests that they've made their move now and they're going to wait and see how things go. And the recent noises we've had from Bank of Japan Governor Shinzo Haruhiko Kuroda would suggest also. So while we're not expecting any actual monetary policy changes from the Bank of Japan next week, the fact that we're hearing from them does tend to create volatility in the market. So I think that's something we should keep a very close eye on. Aside from that, like I say, BQ's over account to come today, but other than that, I think it's going to be relatively quiet into the end of the session. Now, I hope everyone has a fantastic weekend, and I'll speak to you again on Monday. For more in-depth news and analysis, check out OANDA MarketPulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.